Hey everybody, welcome to the April market update for the London and St. Thomas Real Estate Board. So we're going to dive into the numbers here, go over some of the trends. We'll look ahead to April, maybe make some predictions there. We'll also touch base on some of the things that are going on behind the scenes real quick. And hopefully that'll give you guys an idea of what's going on, what we're seeing in the market. So let's dive into it here. We'll go over some of the most critical stats. So the one everybody's always most concerned about is price. So we did see price tick up about 4% month over month. So we're sitting at 644,000 currently, which year over year is up about 0.6%. But again, it's pretty flat compared to that 3-year price stretch there. So keep that in mind, and keep in mind that we usually see prices go up in the first half of the year and usually starts tapering off in the summer months when we see activity drop a bit. So in terms of new listings, we saw 1,215 new listings, which was up month over month, about 12% there. So the spring market is coming. In terms of sales are still lagging though. Sales, we're only at 666. So about a 2-to-1 sale to list ratio there. List to sale ratio. So what that's going to do is it's going to cause supply to go up. If we look over here at month supply did tick up about half a month or so. We're just above that 3 threshold for a balanced market. And I expect this is going to continue to increase. We'll talk a bit more about that shortly here. Although I don't expect it to skyrocket, I do expect it to continue to go up as the market continues on here. In terms of days on market, so this is where we're starting to see some of the competitiveness in the market. Days on market continues to drop. Again, we've talked about this in other videos. This is very normal for the start of the year. We usually see these drop-offs after January, leading up to the summer, and then usually in the summer is when it starts creeping back up again. So this will probably continue to fall for at least a couple more months before it bottoms out, and then we start to see it creep up in the summer. We'll keep our eye on it though. But anyway, just quick rundown. Price 644, new listings 1215, sales 666, days on market 29, and supply sitting at 3.2. Main takeaway is that the list to sale ratio is still 2-to-1. If we look at some 5-year and 10-year averages, sometimes it can help to look for more of a stretched baseline to try and make some predictions. So if we're looking at the March data, sales are actually down 24% over a 5-year average. If I look over a 10-year average, they're down about 21%. So we're still missing something. This isn't a standard spring where we see activity really pick up. And I suspect affordability is still the underlying factor because interest rates are still pretty high. If we look quickly at the bond yields, we've talked about this many times in these videos, bond yields are still hovering around that 3.5 mark, which is still in that 2007, 2008 territory. They've been fluctuating up and down, but 3.5 seems to be a hard number to break. It's happened a couple times here in the last little bit, but we haven't dropped below the 3 mark for a while now. So until that happens, I don't think we're going to see rate cuts, which everybody's been talking about for like a year, it feels like now, about rate cuts, and we still haven't seen it. So I don't expect we will see it. If we do see it, it's going to be minimal. We've talked about that before as well. So new listings, however, new listings are actually up in March. We're up 14% over the 5-year average, and we're basically flat over the 10-year average. But that tells me that there's people that have to sell for one reason or another, but we're still not seeing that overwhelming buyer activity that we're used to seeing this time of the year. So what are we going to see in April? Of course, nobody has a crystal ball, but in terms of me, I'm looking at these 5-year averages, and then I'm looking at the April 5-year averages, and just kind of trying to extrapolate what happened last month, and look to see if that trend continues over next month with some minor adjustments. I think what will probably happen, the 5-year average on sales in April is 899. and the 5-year average on new listings is around 1,500. Around 1,310. What I'm going to say is I think we'll see about a 10% reduction in sales over that 5-year average. So I'm expecting sales for the month of April to come in around the 765 mark. In terms of new listings, I think we're going to see that increase. Probably coming in around the 1,500 mark on the new listing side of things. I think the weather's going to improve. We're going to get more of those people who have been waiting are going to push their properties to market. But again, unless we see an affordability change, I don't see the buyer activity trend changing anytime soon. Again, there are people out there that want to do stuff. Don't get me wrong. I'm not saying the market's come to a screeching halt or anything like that. However, I do expect sales numbers to continue to be underwhelming compared to 5-year averages, at least for the rest of the year anyway. We'll see what happens. But one thing I should mention when I'm looking at these 5-year averages is I did exclude 2020 data for this time of the year. This is basically when in 2020 when we started seeing all the lockdowns and everything happen. So the numbers were extremely low. It doesn't really make sense to include those when I'm looking for a baseline. It was really an outlier data set that I removed from that 5-year average. So keep that in mind. Really quick, some of the things that are going on behind the scenes. So if you're an agent or if you're somebody that watches real estate news, something that's going on in the States is there's been a big settlement for essentially price fixing. Now, I haven't read through the settlement or really followed the trial or anything like that. But what you really need to know is essentially the States has now made it so you cannot advertise a cooperating brokerage commission on a listing. Off the hop, this is in the States right now. We're in Canada. This doesn't immediately impact us in any way, shape, or form. So you could easily just file this in the deal with if and when it ever gets to the point of coming to Canada and not waste any time fretting about it. That being said, there is a similar lawsuit that is basically mimicking the lawsuit in the States that is going on in Canada now. So we'll see if that ever goes anywhere. Me personally, when I look at this, I can't help but be confused. We're arguing price fixing, but at least in the almost 10 years that I've been doing this, there has always been options for consumers. There's always been some kind of ComFree, Purple Bricks, Fair Square, property guide, discount commission, even like PC 275. They've always had, like a discount brokerage model, that kind of deal. There's been so many different examples of choice for the consumer that I get really confused how somehow somebody could think that they're going to have a leg to stand on when it comes to making a claim for price fixing. I'm not a lawyer. I just look at things and try to make sense of them. It doesn't make sense to me because we've always had this piece here. So essentially, the people that started this lawsuit are mad that, or saying that realtors are forcing sellers to pay buyer agent. Most sellers end up being buyers. If they don't buy before they sell, they usually buy after they sell. So there are, of course, cases where somebody sells and they just either move to a different country or they can choose to rent or move into a retirement home, whatever that is. But a lot of times, if you are selling, you are probably also going to be purchasing. So if the argument is, well, I don't want to pay the buyer's agent's commission, the buyer should pay for that. Okay, fine. But you're just going to be paying your own buyer agent commission on the buying side after you sell. So, it's really like one of these. You're just changing the order of things, really. Instead of the seller just prepaying that buyer agent commission, now they're going to pay it when they make their next move, I guess. So I don't know. Again, I think we should just file this until it comes to Canada. Don't worry too much about it. I'm not saying that the U.S. stuff doesn't impact Canada. It does. But this is a problem that I think doesn't really warrant a lot of stress, at least in today's world. If you're a consumer out there, you could look into it and see if maybe you somehow get a payout at some point, I guess, but I don't exactly know what's going to happen there, or even what the payouts are going to be to these people who apparently have been received damages throughout the past X amount of years in the real estate market. I have no idea, but personally, again, I don't think there's been any wrongdoing on a grand scale to really justify a lawsuit against essentially the real estate association or all of the realtors out there. That's just my personal opinion. Obviously, it's biased. I'm a realtor myself. No secret there, but it just doesn't make sense to me. So really quick before we go, one thing that I have seen in some channels here is I've heard the Toronto market, or at least specifically the Toronto condo market, is having some issues. I'm not sure if you guys can see that screen here. Huh. Weird, it's not coming up. Let me just read it for you guys here. So I'll just read through this quick little thing I saw in essentially a realtor subreddit. So condo crash is imminent. This is the title. I got invited to sit in on a meeting last week with some heavy hitters at my brokerage. A few developers that represent thousands of pre-construction condos are looking for a solution to offload condos. Buyers are walking away from their deposits as the value of the condos are worth 30% less than what they were paid for. Assignments aren't moving regardless of buyers forfeiting their deposits. No recourse with investors, as almost all investors bought under numbered companies. Until now, they've been able to keep the actual values artificially propped up as transactions are happening off market. However, now they're going to start listing units on MLS, which will cause a much bigger correction in the overall market. With record supply and such limited demand at $1,500 a square foot, this is only going to worsen. These developers are really worried and think this is going to remain the situation till as long as at least 2028. Interesting. So, I mean, we'll see what happens. I mean, this again is just, to me, not really surprising news. I've been saying for a long time, there's cracks in the ice. Skate carefully. But it's important to know, because if we look again at the just general trends, and again, this is just London and St. Thomas, but if we look at all of Ontario, or at least all of the ITSO boards, which includes the Toronto data here, pretty similar, right? I mean, what happens in Toronto generally creeps down to London. So if we see this start to tick down because of this condo correction, I don't think it makes a great case for prices to continue to go up long term in London. But I mean, things can change. I still expect we'll probably get closer to this 570, 625, somewhere in there, as the dust settles throughout the year here. But keep that in mind. If we start to see prices really fall in Toronto, that will trickle down the 401, just like the prices went up in Toronto and it trickled down the 401 and prices went up here. It's very, very connected. So keep that in mind. All right, guys, hope that helps. Stay tuned for next month's update sometime in May. Take care.